In today's video, let's talk about 4 stocks that have been crashing recently that may be worth your attention. Of course, nothing in this video is financial advice. I'm just bringing you stocks that you can then take away, do your own investment research, and make your own investment decisions about. So firstly, why are these stocks crashing? Well, actually, why is the whole market seemingly having a little bit of a pullback recently? Well, I do think there are some very clear reasons. Firstly, just to get it out of the way straight away, macroeconomics. The macro always impacts the market, and at the moment we've had a little bit of sticky inflation, if you want to call it that. Interest rates, of course, have been a little bit tough. The financial situation has been a little bit pressured, but people are starting to get a little bit anxious, I think, that actually we won't see rate cuts this year. And then leading on from that, of course, we do have geopolitical issues happening at the moment. Needless to say, geopolitical issues do cause quite a lot of disruption, which then does affect the market for a number of different reasons. These reasons include uncertainty and instability. People start getting worried and anxious about the future, which then makes it harder for them people to stick to their investing plans. Remember, when emotions come in, your investment strategy can get a little bit rocky, and that's why it's really, really important to actually understand and work on the psychology of investing. Obviously, this uncertainty and instability can then cause the market and the stocks to become way more volatile. This then means people start sort of pushing off and wanting to reduce their risk because they don't know how to stomach their portfolio dropping. Geopolitical issues also impact global trade, which then means profits from different companies, different stocks out there does get interrupted and may decline. Another thing is currency fluctuations, but this list goes on and on and on. And then we have to throw in the mix that it is an election year. Election years tend to be a little bit more rocky, a little bit more volatile. Now, all of the stocks I'm going to go through in today's video are down across the month. Some of them more than others, and some of them are even starting to slowly recover. But if you look here at this 1 month heat map, you will still see that there are a number of positions across many sectors that are showing up red. They have performed negatively across the last 1 month. Of course, there are some that stand out here that are in the green, like Alphabet, Google, for example, which had a fantastic earnings, announced a buyback, announced a dividend. They are doing very well. But across the board, quite a number of them not doing so well at the moment. So let's start with a personal favorite of mine, and I'll be transparent. This is one of the largest positions in my personal portfolio, Palantir. Everyone in the investing world suddenly knows about Palantir, which is really, really fun, and it's exciting to see it get the recognition that I think it deserves. I've been investing into Palantir for quite a while now, when it was around the $6 to $8 mark, when people weren't really interested. But I do remember this one point in time. I was on a car journey, I was the passenger, and I was speaking about Palantir. This was back quite a while ago, maybe, I don't know, November 21, I don't know when it was. It hit me in that moment how powerful Palantir is in terms of their market reach, in terms of their total addressable market, and it kind of exploded my little mind a bit, because I was thinking, they can work with this sector, they can work with this sector, they can work with this company, they can work with this sector. And it kind of shocked me that they've just got so much potential market that they still haven't started to expand into. And actually, no, this must have been back late 2022, because I remember at this point, they hadn't worked with that many massive companies, but look at them now. They are now working with so many commercial businesses from all different industries, energy to financial services to automotive to retail and much more. And they're working with companies from Tampa General to Ferrari and everything in between. And actually, just the other day, they announced a multi-year partnership with Praxis. They are one of the largest global clinical research organizations, and at this point of time, we don't know how much that partnership was worth. This partnership is to integrate Foundry and AIP into their clinical trial operations. And actually, they have been working with Palantir in the past, across the past year or so, I believe. And a director at their company actually said that Palantir's software has saved them between 6 and 7 hours per subject matter expert for each study design. And it has allowed them to reduce the time that it actually takes to deliver data by 50%. So clearly, what they've seen before working with Palantir has It's been really, really good. They've now gone on to sign a multi-year partnership with them, and they are very excited. And this is just one partnership, we see these popping up all the time. And talking about healthcare actually, but going slightly outside of the US commercial market, we did have that massive NHS contract, the National Healthcare Service here in the UK, absolutely massive of course, and Palantir actually got that partnership, which was a massive, massive win. And there was lots of controversy around that. Should they get it? Is Palantir this big US spy firm company? I spoke about that a lot on my main channel. But this is of course an international partnership, and this happened after a very, very long procurement process. And we must not forget that they have their whole government segment as well. So their revenue streams are not just limited to one area. They have their commercial, they have their government, and then they even have other things like their FedStart program. Definitely look into Palantir if you haven't already. When companies release their earnings, and of course we are going through earnings season right now, things can get very volatile. We never really know. We can't predict what's going to happen. Personally, I try and stay away from timing stocks during earnings. I just carry on with my investment strategy as I would anyway. But Palantir are due to announce their earnings on the 6th of May, which is coming up. And if we look back at last time, something crazy happened. They released their earnings and the stock went up by like 47% in the days following. Now, that's not to say that that will happen again this time. No one knows. But we could be in for a treat if it does well, if the guidance is really, really strong and the forward-looking commentary is positive. AIP and boot camps. I just want to talk about this quickly with Palantir before we move on to the next stock on the list today. AIP, artificial intelligence platforms. It's one of their offerings. It's still a very new offering, a new product that they have, but they have basically been running these boot camps, it's basically a chance for people at companies. It doesn't even have to be the decision makers at companies. They can come to the boot camp. They can spend between 0 to 5 days at these boot camps. Often they spend a matter of hours, maybe half a day, and they actually see AIP in action. So they're able to go from zero, no knowledge, to having a use case in a short space of time. And Palantir have been expanding rapidly their AIP bootcamps, and they have been very, very, very successful from these. Palantir were featured recently in a Bloomberg article, and in that article, the AIP bootcamp strategy was discussed. And their global head of business development actually said that Palantir are at the point now where they can't do traditional sales calls. They can't just hire people to take these calls because, quite frankly, the demand is too high, and also potential customers don't understand how they can use artificial intelligence in their business. So doing a sales call doesn't really make sense. So these AIP bootcamps are actually showing them how they can use it, and letting them have that hand to keyboard experience is really, really paying off for them. And then the article went on to talk about how customers that have actually attended an AIP bootcamp and have, become customers of Palantir are then doing their own Palantir AIP bootcamps for their customers. So now you suddenly got this model where you have proliferation happening, which is insane. It's not even Palantir necessarily selling their product anymore. It's Palantir's customer selling Palantir's products. And you might think, well, why would their customers sell Palantir's product? What are they getting out of that? Well, it's because if they have their customers, this is confusing now, on Palantir's software as well, it becomes more efficient for them. So it's a win-win. It's a win for Palantir's customers, and it's a win for Palantir. Palantir only went public quite recently, but they're not yet included in the S&P 500 index. However, they are eligible. So during the next rebalancing, maybe Palantir will be a company that does get added. It's kind of a matter of when, not if, for me now, but it will be a very exciting time when this happens. They've also got experience of building industry-specific solutions. So for example, Airbus and Palantir have actually partnered up to build a platform called Skywise that is now being used by many, many aviation companies. And this is actually really interesting when we think about all the recent issues that Boeing have been having, and we compare those issues with Airbus, who seemingly haven't been having any more issues than normal. Now, I will leave a video up here that I made all about all about Skywise, Palantir and Airbus's joint platform. So definitely watch that if you don't know about this already. But they do also have other industry specific solutions as well, and I expect this will expand in the future. Their revenue per top 20 clients has been increasing since they went public. Some people don't like this because they don't like the fact that they are quite heavily reliant on just a select number of customers. But to me, it does show that Palantir have been able to actually grow and deepen their relationships with the biggest clients that they have. They did hit a big milestone when they posted their first profitable quarter in Q1 2023, and they have remained profitable by quarter ever since, increasing their profitability, which is a great sign. Their debt to cash ratio is looking quite strong, and honestly, there's so many things to say about Palantir. Like I said, it's one of my biggest positions. I do a lot of research into this company, so if you do want more information, check out and subscribe to my main channel, which I will leave linked here. So just looking at how Palantir has been performing compared to the index over the last 1 month, like I said, this whole video is about stocks that haven't been doing too well over the last 1 month. They're down by nearly 10%, which is underperforming the index. But what I want to show you is, let me just expand out to a year-to-date view. I was telling you that during their last earnings, the stock had a massive increase afterwards, and you can see that by this huge surge here. And actually, it never went back down to pre-earnings levels. Again, not saying that that's going to happen this time, we just don't know. But this is a website called Seeking Alpha. It's where I go to do most of my stock-based research. I really like their section where they have written articles, very thorough articles indeed. You can see one here. If you do want to try this platform, they do offer a 7-day free trial if you use my link in the description below. Let's now move on to the next stock on our list. When you think about artificial intelligence, chip makers, and semiconductor companies, you probably think maybe Palantir, maybe Nvidia. However, this next one definitely deserves a thought too. And that company is Broadcom. Ticker symbol AVGO. They are basically a massive conglomeration of various tech companies. To many people's surprise, they are actually one of the leading semiconductor stocks on the market, but they do everything from enterprise software solutions to semiconductors to broadband infrastructure software as well. And one thing I really like about them is just that they have such a diversified product line. They are not super reliant on just one item that they sell. And you can actually see this here. This is their 2024 revenue guidance by segment. And you can see that actually they have semiconductor solutions, which include networking, server storage, broadband, wireless, industrial, but then they also have this whole infrastructure software area that they're getting revenue from as well. Mainframe, cybersecurity, cloud infrastructure, so very diversified across the board. In Q1 2023, they reported a 34% revenue growth year over year. They also acquired a company called VMware. I think that's how you say it, but this happened during a $61 billion acquisition. And that part of their business has now become quite a significant part of their revenue from the software infrastructure segment that they have. They are not actually announcing their earnings till around the 12th of June, I think, so we're going to have to wait and see what they post during that. This acquisition did mean that their debt levels did increase a little bit. They have been paying off some of their debt, but they still have quite a significant amount. But you have to decide, do you want a company that has very little debt but isn't really looking to grow and expand? Or would you rather have a company that is doing acquisitions, is putting money back into their business, and you would see that pay off for the future? You kind of have to find a balance, I think. They do pay a dividend, and on Seeking Alpha, the dividend grade is looking very strong. Dividend safety A+, growth A, yield B-, and consistency B+. The yield is quite small. If you are looking for a company that does have a lot of growth and pays a dividend, this could be one you want to look into. But very good here, dividend growth. They have been able to grow their dividends consistently for 13 years, which if you are someone that is relying on dividends, you want a company that is consistent. You don't really want a company that is all over the place because you can't trust them to pay the income, I guess. Dividend frequency is quarterly, 4 times a year. And now let's just have a look at how they have been performing. So over the last 1 month, not really done much, to be honest. And you can see that actually it did go down significantly here, but since then they have been able to recover ever so slightly. If I made this video a week ago, we would see a very different picture. But yeah, not been doing all that well. Year to date, doing pretty well, you know, apart from this big fall and recovery that we've been seeing recently, doing okay. 1 year, you start to see their power, and when we expand out, you can see that they have been a growth story indeed. But you might be wondering why I'm including them in this video. Well, it's because when I planned this video, they were down by about 9%, and I didn't want to take them out just because they've had a recovery period recently, because actually they are still worth mentioning, and it just goes to show you that stocks like this can be quite volatile. The next stock is not one that I have in my own portfolio, however, I do have exposure to it through my S&P 500 ETF that I have called VUSA. Now, this company is one that I've not really ever particularly wanted to hold as an individual stock. However, I do see them to be a very, very, very powerful company, mega cap company. Many people have made a lot of money out of this one, and that is Meta. Now, why are they featuring in this video? It's because, of course, they recently had their earnings. And you know what? They did really well. They beat top line, they beat bottom line estimates. Across the board, it looked very good when you're looking at it on paper. However, the stock suffered. The stock fell. Massive, massive sell-off. I think one of their biggest sell-offs in a one-day period. Don't quote me on that. But why did it fall? Well, I think it all came down to guidance. And a lot of people were very confused because Tesla posted their earnings, they missed, however, the stock shot up. And that was because of the commentary and the forward-looking guidance that was given. It was very bullish. However, it was kind of a different picture for Meta. They beat estimates, but the stock fell, and I think it's because of the guidance that was given during the call. To me, it did seem like a little bit of an overreaction. Maybe it was a little bit oversold, but it just seemed like the market really didn't like the increased capex spending and the overall expenses increasing. And also the commentary that it would take quite a while before we actually saw the revenue increasing due to the AI investments. But let me know what you think about that in the comments below, and whether or not you are buying Meta right now whilst it is dipping. Right now, Seeking Alpha is showing me that the revenue growth year over year is being given an A grade, and it's coming out as 21.62%, and forward looking as well an A 15.35%. Just going on to their profitability, you can see profitability grade given A+, and broken down greens across the board. Now, I'm just going to go on to the summary page that I have here, and we can see that out of the 3 ratings summaries, we can see 2 buys and a hold. Of course, never just base your decisions on this. You should always do your own research. But let's just take a look at the chart now. Over the last 1 month, you can see a massive, massive sell-off after earnings happened here, and then some consolidation happening now. We'll see what comes up next week. But over the last 1 month, down by 10.61%, underperforming the index, which has been, not really doing very much. However, 6 months still up significantly. And if we expand out to a 1, 3, 5-year period. So it just comes down to, do you believe in this company moving forward? Is this a buy-in opportunity? Or are you just saying, nice to see, I'll learn something from this about how volatile the markets are, but this one's not for me. The last one is a stock that has actually recently announced a partnership with Palantir, who of course we spoke about earlier on in this video. This company is Oracle, and this partnership is all about Palantir and Oracle joining forces to deliver mission-critical AI solutions to governments and to businesses. And as part of this, Palantir will move Foundry workloads to Oracle's cloud infrastructure and will deploy both Gotham and AIP across Oracle's distributed cloud. And of course, this partnership does benefit Palantir, but also I think it will allow customers to actually see how Oracle fit into the AI story, the AI picture. With Oracle, we've been seeing both year-over-year revenue and net income growth, and the growing demand and adoption of cloud-based AI application could actually help them grow further in the future. We are expecting to see a massive, massive growth in this area and in the general market, and hopefully Oracle are positioning themselves well to actually capitalize on this. Now, they are also paying a dividend. They do have quite a small yield, but they have that stock growth as well, if that's something you're interested in. The dividend growth, the number of years that they have been able to consistently grow their dividends, is 9 years, which is pretty good. There are some companies that, of course, dividend aristocrats, dividend kings, that have a much higher amount of years, but very, very good. Growth is looking pretty stable. Obviously, do further analysis. Don't just go by this. Profitability, again, quite strong. You'd want to look into, all of their financials, dig a little bit deeper. And if you need help with that, I have an entire 4-hour video workshop that will take you from completely not knowing anything to everything that you need to know, and actually how to stay up to date with your stocks once you've decided to add them, and picking stocks in the first place? Where do you even start? All of that is in my workshop, and I will leave it linked down below, and I will make it a highlighted comment so you can find it easily. So over the last 1 month, you can see here down by about 7.5%, underperforming the index. But again, like with all the stocks on this list, I planned this video and then they had a little bit of a recovery, but still down quite significantly. Year to date, much better picture you can see, and we can expand out and we can see that it has been quite volatile, but overall have been able to beat the index. The thing is about picking individual stocks is you don't know whether they're going to be able to beat the index for many years. And if you're not willing to do thorough research, just invest into an ETF. Honestly, that's my opinion. Obviously not financial advice, just my opinion. We'll have to wait and see what happens during earnings. YouTube is currently telling me that only 17.3% of people that watch my videos actually subscribe to this channel, and a whopping 82.7% of viewers don't actually subscribe. So if you do enjoy watching my content, please consider subscribing. It's absolutely free. And of course, if you don't like my content in the future, you can unsubscribe. But until next time, keep analyzing, keep investing, and like I just said, don't forget to hit that subscribe button.